Hi, this is Mark with ValueCharts.com. We're taking a look at December gold here, and this really serves as an excellent example of strategic entry points based on objective valuation. Now, we're using value bars as our tool to read objective market valuation here, and essentially what we've seen here is on a 15-minute basis, December gold has come down into significantly undervalued in two of the last three bars here. Now, that represents price levels right around 1746.80, call it, and 1745.80 or so. So we'll use the higher of these values at 1746.80. Now notice when it first came down, we did see a bit of a pop here all the way back up to 1750. So in this particular case, we could have put a break-even stop if we wanted to be, really aggressive with our trade. A looser stop obviously is a more conservative approach on this second, but if we put a break-even stop here once it rallied a few points, we would have been stopped out again on this third bar. But once again, when this market, December gold reached down into significantly undervalued so far, that is the low of this correction. And there again, that's right around the 1745.75 basis, and the low was at 1745.70. So that would have been so far a fairly good entry point. Now, it remains to be seen whether that will be the low of the correction, but in general, these can be very strategic entry points. I'm looking for gold to potentially move higher here over the upcoming weeks. So this is a longer term outlook that I'm working within. Now, gold's rallied for the past day or two, and I've been able to make a little bit of money in gold yesterday. I'm now down a little bit today with what's happened, but in general, I'm up over the last 2 days, a couple $1,000s. I'm looking for gold to be stronger here and to potentially get all the way back up to the 1800 level over the next several weeks. So we're just looking at strategic entry points within the confines of the outlook that I've created here, or that I'm looking at. Let's go ahead and take a quick look at some weekly charts so I can briefly explain the reasoning behind my outlook. Okay, looking at the weekly chart here in gold, we'll notice that this market right now, according to the MQ momentum, almost looks like it's due for a bottom here. So we've had a nice run up here. We've had a fairly healthy correction of probably upwards of $65 to $70 an ounce. The weekly chart dipped down into moderately undervalued here, and that's at a level below 1737, which obviously would have represented an excellent entry point. And now it looks to me like we're starting to strengthen here. So I'm moving forward the expectation that we're going to close this week out, and we still have a lot of trading left, obviously, with today being Wednesday, tomorrow Thursday, and Friday as well. But I'm trading with the expectation that we'll see a kind of bar here where we close out stronger on a weekly basis. Now, that's making an assumption here that that's actually going to happen. We have a lot of trading left before we, to confirm that, obviously. And but if that does happen, I would say that there's a good chance that that would paint a fairly bullish picture here of gold. So again, I'm watching gold closely here, and just keeping in mind that that there's a lot of trading left to be done, and this outlook could essentially be faulty. So we could have some more downside here with the correction, possibly a lot more downside. But there again, this, with what I'm seeing on the MQ momentum, I think that there's a pretty reasonable chance that we could see some strength here with the close of this week near the higher end of the range, and then we could see this market start to really take off from there. So I'm pretty bullish longer term gold, and within the confines of that, we did see a strategic entry point according to value bars here on the weekly. Now when I use value bars on a longer term basis, like a weekly chart, I'm looking to use a 5-bar analysis period. I want something a little more sensitive. When I go intraday, like 15-minute charts or 30-minute charts, I tend to use 14-bar analysis periods for 15-minute bar charts, and 14 or 10-bar analysis periods for the 30-minute charts. So just keeping that in mind, that we do have that flexibility. But longer term charts, the longer term bar intervals often work better with a 5-bar analysis period, just to make sure that we're giving ourselves plenty of opportunities to enter markets when they do become undervalued in this case, or overvalued in terms of exiting. So, all right, we'll see what happens with gold. This is just your daily update at valuecharts.com. Be sure to check back tomorrow with another video forecast, but we are long gold for the time being, and we do have a position ourselves in this market. We're up a couple $1,000s over the last 2 days and are looking for this market to head higher. Thanks for watching.